Hi everybody, welcome to another update on the stock screener. Today we're going to talk about Trigon metals. They had some very significant news release today. This is actually the first production data that we have on the open pit. So they are now in production, as you know, and we are looking at the parameters now. It was actually very good news because the stock is up while the overall market is down. And you can see here people are buying. Now, what was the news? Apparently, they were feeding the plant with low-grade material just to test it out. 0.73%. Normally, it's above 1% grades on average. So, what did they get? They got a concentrate with 33% copper in it. And that's higher than the 20% that they normally get. So that already is good news because that means that the concentrate has more copper in it. That means that you need to produce less bags, less concentrate to get the same amount of copper. So you can transport less concentrate to the refiners, and that will reduce costs. The second number is the recoveries, which is 80%. That's also very good because it's higher than last year. So these are the most important numbers here. Let's look at that news release from last year. Last year, so this is from 2022, we actually saw the following numbers. So they had 34,000 tons of 0.85% copper fed into the mill, and that produced 861 tons of 19% copper. So here you already see 19.75%, that's the 20% concentrate grade. That was 20%, and now it's 33%. So it's already higher grade concentrate. And when you calculate the recoveries, you can do that yourself. That's this multiplied by this minus this multiplied by this. So I did that for you. That's 295 and 170 tons copper. So the amount of copper that was fed into the plant was about 300 tons, and the amount of copper that's actually going out is 170 tons. So if you divide this by this, then you actually get the recovery rate, right? 57.6%. Correct? Because this was fed into the mill, multiplied by this amount of copper, and you produced this amount of concentrate with this percentage of copper. So this is what's in the concentrate going out, and salt, this is what goes in. So recovery 57.6. Okay, so that's actually very good. Just to illustrate with some schema, so you have feed coming in, then there could be gravity concentrate or flotation concentrate. We are talking about the flotation concentrate, not sure if they have the gravity, but this is what comes in copper, and this is what comes out. And that amount is apparently 80% now, while last year it is only 60%. So that's a huge improvement. I think they can actually bring this 80% to 90% possibly, because they only fed it with 0.73%, so it could go to 1%. This could rise to 85, 90%. I'm not sure about the numbers, but if this goes to 90%, and last year they had only 60%, what does this mean? This means that we now produce 50% more copper. Maybe I should illustrate this a bit. So you have this plant, and feed is coming in. In that feed, we have actually what was it? So this was a year ago. We have a recovery of 57%, and what's coming in is 295 tons of copper. So let's say 295 tons of copper that's coming in. And what's coming out? What's coming out is just to make it more visible, 170 tons of copper, right? So the recovery is this divided by this, and that's 57%. Now, what is this 20% again? Well, that's this here. So 170 tons, but looks something like this. This is 20%, and then times 5, maybe a little bigger. 1, 2, 3, 4, 5. So this is how much tons? This times 5, 800, 800 really bad at math. 170 times 5, 850. Yes, but of course this is 850 minus 170, so 680. So you get the drift. The 20% copper comes from here, and here we have, yeah, that's difficult to say. This is 0.85%, so 1% is this, and then you have huge waste that needs to go to the tailings. So they strip out all the waste, and then here you get the concentrate. So that was last year. So what do we get this year? This year, yeah, we actually don't know how much tonnage, but we do know the recovery, which is 80% instead of 60%. And maybe this is even 90%. So let's say we have the same amount of copper. Then here we will have 295 times 90% tons of copper, which is a bit more. So I make it a bit bigger here. And it's actually 50% bigger, right? Because here you only get 295 times, yeah, let's say 60%. And here you get 295 times 90%. Okay, so that's 50% more, 50% more production. And the amount of waste is now 30%. So this is 30%. And that means 1, 2, 3. So as you can see here, 33% concentrate grade. So this is 33% of the whole concentrate. So you can see here the difference. Here you had to ship a lot of concentrate to the refiner, process a lot more tonnage through the bags and filters, and you get less concentrate in your, less copper in the concentrate. Now, today, we have a lower amount of tonnage to ship and to transport, but we have more copper in our concentrate. 50% more production. See, this is a smaller amount, and this is a bigger amount. And the waste is lower than here. So we not only produce 50% more copper, we actually have lower costs as well due to lower transportation, etc. So this is actually very good news, because then we can update our NPV chart. So normally it was 2.8 to 9 AISC. Now we can actually reduce it a bit. Should actually even go to around $2. So let's take $2 AISC, because when you produce 50% more copper, that means the cost per ounce will drop about 35%. So 2.8 minus 35%. Yeah, that's at least $2 here. The production is going to go up by 50%. I put 1.3, but yeah, let's take 1.4 just to be sure. Here's 1.4, 1.4 here as well. So I think the production of the open pit could be even higher than what's given here. 50% higher, because the estimates were too low. We actually have 50% more production, I think. And that's due to the better mineralization from the other pit. Costs went down a bit, so yeah, here let's leave this alone because I think that yeah, the underground has much more production, so the open pit will have less effect in the coming years. But yeah, I just added that production to the open pit here, 40% more production. And you can already see some improvements here. So the last time we had some negative cash flow, and now it's maybe positive in cash flow. So small change, but it's significant. I think it's significant. Let's see how much the net income should be if we strip out the capex. Let's say we don't build Assis Far West, then we should have 20 million net income. For next year, 40 million net income for 2025, based on the new production numbers. Enterprise value is about 55 million, so a PE of over 2, and a year later a PE of almost 1. So this is very cheap. And in 2026, of course, a PE of less than 1. So plenty of upsides. I think it's now very easy to finance the upgrades of the underground, and then we are ready to 5x, 10x in the coming years. So that was the update. Very good news. Better than last year. So I expect the share price to keep on rising. And I'll see you in the next video. Bye.